Yeah, hello all. Good evening. So, welcome to today's index analysis. So, today, as I've mentioned in the thumbnail, that futures OI gave a very strong clue for today's up move. So, let me explain that through the data. So, when we look at yesterday's EOD data, we find that in the EOD data of yesterday being expiry. I mean, these positions are just expiry closing of positions. Like we see that there's some calls bought and puts bought. All both the numbers are almost similar. So these numbers we cannot consider uh, because these are expiry closing of positions, and they don't hold much significance because of the expiry context. But what is more significant on a Thursday is a futures OI. So because futures is a monthly expiry, and what big people do on Thursday using futures OI gives us maybe a better clue for the upcoming day than the options, because options are just closing of positions because of expiry. So what happened in futures is that, as we can see here, yesterday from FIIs actually um, they increased a bit of short positions. You can see that from 4.2k negative to the negativity is increased to 11k, which is like 6.8k worth of futures OI contracts are being added by the FII. So the futures OI data indicating a bit of bearishness. So this is one data point which we can consider. The others we cannot consider because of the expiry. I mean, the options OI we cannot consider because of the expiry context. Now, just for the confirmation, you can also see this data freely, as I've told again and again that there are people who are representing this visually in a much better form than sensible, I guess. So let me show one example. Yeah, this I think I had discussed. So there is this Twitter handle which is uh, giving FIDI data actually in a better form. So when you look at yesterday's FII DI data, let me just zoom this. We find that FIIs actually have sold. This is what the number which Sensible is showing, that the net futures they have sold. We should ignore the options part because of the expiry. But what one thing which is common in yesterday's futures OI is that we see that DIs have also short some futures. They also sold futures. FIs have sold futures, and prop desk has also sold futures. And the only you know participant in the market who's bought futures is the retail. So now we know that what might happen in this scenario. Now, because it is they have sold the futures, all the big institutions and professional traders. The logical conclusion to this is market has to come down. So, and accordingly, just keep this in mind that big people have sold futures, and the retail have bought futures. Now, when you look at the OI data as it unfolded in the morning, you can see that Nifty opened gap down. Look at the chart first. So when you look at the chart, let me remove today's price action. Yeah, so you can see Nifty. Let me remove even Bank Nifty also. Bank Nifty actually did not open with such a big gap down. I mean, Nifty's gap down was, and when you look at the price level, this was the I think earlier swing which I discussed, and if you add the levels, price is comfortably in the above 0.382 zone. Now, when I start playing the bar for the first candle, you see that price opens gap down, comes down, and takes support from the 0.618 level. So first, it's just taking support from a strong zone. So probability is that from the simple price action itself that this level can be held. Okay, but let us not conclude from the price itself, because we have other data points which can help us with our analysis. So now, when you look at the OI, what was the OI which was getting built at that point? Now, keep in mind that the future big players were short. So it opened gap down. It went gap down. I think 100 points was the negative. It traveled, downside. Now, when you look at the OI data, I'm seeing the Nifty's OI data, right? So when you look at Nifty's, yeah, this is open interest of the futures of this line is for yesterday and this is for today. So what I'm trying to explain is, as we see from the EOD, that there is a increase in the OI. See, in the live market, we will not come to know that. I mean, this line is demarcating yesterday and today, right? So what I'm trying to tell is the OI which you see uh, in the live market, we will not come to know whether this is a long build-up or a short build-up. We'll just come to know that it's a futures OI. Now, from the theory, we know that. Let us recall the theory that if this is futures OI, and if this is the price, right? So we can have four simple combinations. If the future OI is increasing and the price is also increasing, we can say this is a as a long build-up, right? And if the future OI is increasing and the price is decreasing, we say this as a short build-up. So two or simple scenarios. Now, when the future OI is decreasing and the price is also decreasing, so this is a kind of a case of unwinding. This is a, you can think of a long unwinding. And then if future is decreasing and the OI starts to increase, so this is a case of short cover. So the point I'm trying to convey is that these are the four simple basic scenarios which we must be aware while interpreting the futures OI with respect to price. Now, moving on with the understanding of this, when you see that yesterday the future OI increased, this is for Nifty. Future OI is increased. In the EOD data, you know that this is a short. I mean, somebody has shorted this. So logically, the price, it is expected that since big people have shorted the futures, the price might take some dip. So today, as you can see, this is the dotted line is the price. Nifty, went down. Now, what the OI, what will happen to the OI when the price goes down, gives a strong clue about the future direction. Like for example, big people have shorted the price at this level. I mean, futures at this level, okay, and then the price comes down. Now, while the price is coming down, you see that the OI is getting unwound. You can see in the first, these are 15-minute time frame. I'm using 15-minute time frame of the OI change. So in the first 15-minute time frame, that is 9:30, 9:45, 9:15 to 9:30, 9:30 to 9:45, and 9:45 to 10 o'clock. You see there is the OI reduction. Now this is OI reduction, and this is price decreasing. So what this conveys is that the OI which was built on the short side, the price has fallen and now the OI is getting close. It means we can come to a conclusion that, and since we know that this is short positions, they are closing the they are closing the short positions. I hope the point is simply conveyed. They are closing the shorts. This is a very strong clue in the morning itself, without anything, to come to some conclusion that the prices or the market will not fall today. OI went down, price is going down. Now, just think in the other direction. If the OI had kept on going up and the price, if it was falling, then we can think that okay, this is a case of short build-up and the market will continue to fall, right? So, but this was not the case. The OI, in fact, started to unwind. So the short positions, even now, we are not able to tell because we still are awaiting today's EOD data. But logically, we can come to this conclusion that since the price has fallen and the OI is getting unwound here, so we can come to some conclusion that okay, the futures OI, which is short, is getting closed at least, and then the price is going down. So this is case of closing the short positions, and then you can see that once the short positions are getting closed, after that the price went sideways, and then you can see that the OI starts to add. Now when the OI starts to add and the price starts to go up, so this again indicates a case of long build-up. So again, let us wait for the EOD data to indicate this. But this is the logical way to think and come to this conclusion. Now, this is not the only clue which we had. Now, when we talk about the short positions of big players, see, generally, these short positions will be in both Bank Nifty and Nifty, but it is higher in Nifty than. Uh, I mean, generally observe that the short positions will be preferably higher in Nifty than in Bank Nifty. So, what I was trying to convey is that when you look at the Bank Nifty OI at the closing of yesterday, you don't find such a OI increase. In fact, there is OI decrease. When you're trying to compare where probably the short positions are getting added, you will also come to the conclusion that okay, at the close yesterday's closing, Bank Nifty OI did not increase much. There was only increase in Nifty's OI. So the logical conclusion is that the short positions could have been made in Nifty and not in Bank Nifty, right? And why I'm telling this, because you can see that today. Um, Let me erase this. I think this point I think is clear. Now, Bank Nifty gives us the additional confirmation. Now, Bank Nifty, since it did not fall much, you see this is the demarcation of yesterday and today. You see that there is increase in the open interest of futures in the first 15 minutes. It's a healthy increase, and the price is not falling. So, when the price is not falling and the OI increased, so this makes for a conclusion that no, the OI is increasing, the future OI is increasing, and the price is also increasing. So it is probably a case of long build-up in Bank Nifty. So Bank Nifty may be stronger, is what you come to a simple conclusion by looking at the futures OI. Now, since we have another piece of confirmation from the options OI also in intraday, I'm talking about. So when you look at the options OI of Bank Nifty, maybe in the initial 1 hour, okay, just take the same time frame in the first maybe 1 hour. So 9 of 9:15 to you can also take till 10:15. You find that in this now this is shifted actually. Mm, okay, so yeah, I mean basically the point I want to convey is that there was Bank Nifty had good amount of put writing. I mean there was both call writing. Okay, we can see it from here itself. Yeah, we can see that in Bank Nifty there was good amount of put writing visible. See, whenever there is puts also getting added along with the calls, you have to be cautious on whichever side. Like for example, you're seeing both. There's good call rating for the first 15 minutes. There was a good put rating. Now the thing to observe here is that the which is falling more steeply. Of course, the call rating is getting reduced here, and finally here you can see that the puts remain, and you see the call unwinding, put writing continues, right? And then goes in price goes into the sideways to upward action, and finally you see here that the put writing increased, call unwinding started. This is how the price was taken on the upside. So so if the fall had to happen, then the call OI should have continuously increased, but that was not the case. In fact, the call OI kept on decreasing, and the put OI kept on steadily increasing. So this is how big people use the OI to control the direction of the market. Now, when you observe the same on Nifty, you can come to the same conclusion that initially, as a reaction, there will be more call rating because of the first, fall in the first 15 to 30 minutes. But after that, you can see there is hardly any call rating, and you can see consistent call unwinding. So that's where your hypothesis gets confirmed: put writing, put writing, put writing, and call unwinding. You can see that, and the prices start to go up. So you come to this conclusion that yes, fall is there, and whatever hypothesis we formed with the future, why is falling in place. And now, with this understanding, when we look at the order flow, you come to the conclusion that let's take Bank Nifty first. So in Bank Nifty, you can see that uh, hardly there was any negative delta to start off, right? So even though the candle was red, the delta was green, but the green delta lost some amount of delta, but still it is having a lower wick. So we'll not have any bias in the first candle. You will not have any negative bias also, although the candle is red, but the delta is green. Now when you look at the next when you look at the next candle, you see that here some conclusion you can derive, because the price is not going below the low of this, it's making a small doji type of candle, but now you see that the delta is getting lost. Now from 19k, it has lost again more than half of the delta, which is significant to come to a conclusion that at least it is not bearish, right? We should not have a bearish bias on bank nifty. Now after this, what the delta starts to increase now on the positive side, and as per our logical conclusion, the delta remains same, price is going up and the delta increases. Now this overall confirms understanding that yes, the move is now upside, because it has also broken the day's high, and now price consolidates, and then with the overall small consolidation which took place, price ultimately broke out, as we could see. I think it was from this time, maybe yeah, from 12:15 odd levels, the price started to slowly inch up above the VWAP zone. So the delta also starts to increase. You can see that the delta increases, and then you can conclude that the move is pretty healthy. It's not only the delta which confirms that the move is healthy, but also the OI. If you observe from that 12 whatever timing I discussed, 12:15, you can see here that this is for Nifty. Let me show for Bank Nifty. You can openly see here that the put writing starts to increase. This is what you need. As the price goes higher, the put writing should increase. That shows the intention to take the price higher. And you should also see call unwinding. So perfect, a proper case for up move. And after this decreases, you should come to a conclusion that okay, the fine, the up move is done. So I mean, this is how OI also provided the hint, order flow also gave the clue, and the opening conclusion also with the futures OI gave a stronger clue. So today the market is not going to fall. And one more simple conclusion is, with the help of max pain also, you can see that initially, since there was a small fall, max pain started off with 43,400, and then max pain increased. Now why will max pain increase? Max pain will increase because the range is getting shifted higher because of put writing as well as call unwinding. Max pain increased from 43 400 to 43,500, and from 43,500 it increased to 43,600 at the time of closing. So the up move is kind of genuine with put writing as well as call unwinding. This the max pain indicates, and the same understanding holds good for Nifty also. As you can see that Nifty, although was not so strong as Bank Nifty, its max pain also no, increased, and currently it is around 18,300. So overall, I think the concept is pretty much clear what I'm trying to explain. With the help of EOD data, we can come to some directional bias, and then based on what the price does, and how the OI reacts to the price. With that, we can come to some logical conclusion, like we just today. And coming to the price perspective, as I mentioned that for this swing, let me draw that again. So for this swing, this is the hourly chart. I've told that the price was healthily sitting above the point 30. So it took support. So Nifty took support at the golden ratio, and once it takes support at golden ratio, at least it is expected that to bounce and reach back the the swing high. So let me continue the replay of this. I can see that the price stays there, moves up, it goes higher. Yeah, it just closes there. So Nifty, as on today, has just closed above that. Maybe in the coming days, it is still in the healthy range above this. So till that time, the bias is pretty much bullish. Coming to Bank Nifty, you can do the same exercise for Bank Nifty also. Now you can just increase the, yeah, you can put the swing high and swing low. This is a swing high, this is a swing low. Now you start the replay, you find that Bank Nifty is much stronger, and it takes support from 0.38 level itself. Right, it is even stronger than Nifty, because it's taking from support from 0.382 level itself. So this is very bullish. So even from simple price action, it is clear that the It's bouncing from a very early good. It's taking a very good bounce, and then you can see that it breaks the uh, resistance with a good delta. It's around 115. I think so when you see 115 delta, 115 is it? No, that's an hourly chart. So overall, this delta is very good. So and then it closes somewhere around this level. So Nifty was relatively weaker. Bank Nifty was comparatively stronger. So overall, another for Nifty it is just a flat day, but Bank Nifty has come back. No, Bank Nifty leading the index is positive because it's Bank Nifty which leads the index in either direction, upside or downside. So hoping that Bank Nifty reaches another height. Now coming to the macros, as of the macros is pretty muted. The dollar index is trying to, trying to go up. We're not sure why. What is the news factor behind this? Um, dollar index going up, but overall, till dollar, this may be a technical bounce for dollar also because when you see the daily, uh, sorry, when you look at the daily chart of dollar index, it is trying to come back above its earlier swing. Only when it crosses this swing, we can think of some kind of first level. This was the earlier swing on 2nd May of a dollar index, and post that it has series of hurdles here. So it may be a technical bounce for the dollar. So till dollar remains below this 102, 103 levels, equities are good to go higher. But let's see why this dollar is trying to go up. As of now, I don't see any clues except for the upcoming US debt ceiling related issues. The interest rate most of the time is looks to be factored, but whenever interest rate and inflation appears to be a bit sticky, so that's why it might be going up with anticipation of maybe one more hike or maybe taking more time towards taking more time before Fed pivoting. So overall, this was the analysis for today. Hope it was helpful. Thank you.